Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, March 17th. Happy St. Patrick's Day, everybody. We got quite a bit of economic data to go over, so we'll just jump right into it. We'll start off with the retail sales for the month of February. So in January was obviously a good month here when you see a 0.6% increase of month over month sales in January. However, it was supposed to dip down to 0.1%, and it actually contracted by 0.5% in February. Now, when you take out big ticket items like autos, we had very similar numbers. We had 0.6% increase in January. Forecast also accounted for 0.1. However, it only dropped to 0.4% in February. On the other hand, we got industrial production, which was opposite. We had a 0.5% drop in January, but forecast accounted for a 0.5% increase in February, and it went up 0.6%. So industrial production increased in February. And then we have capacity utilization also increasing. It went from 76.8 with a forecast of 77.1. Came in slightly shy at 77, but higher than the previous month. And we also got NHB home builders index. This is the confidence index that gauges the confidence level for home builders, which is an important gauge. But as you can see here, we're starting to see it slip a little bit. So in February it was 74, and in March it dipped to 72. Obviously, with all the talk with the coronavirus and everything else, they're going to probably feel that maybe things uh, may not look at the outlook may not be as bright as it was prior to the coronavirus. So, with last but not least, we got business inventories. So basically, it was unchanged or nothing in December, and it dropped slightly to 0.1% in January. So let's jump ahead here to the headline news. The stock market is trying to make a little bit of a rally after a huge disappointing loss yesterday. That was on the day after that we had the emergency Fed meeting. So instead of having the FOMC starting today, they had the emergency on Sunday and announced a rate cut and quantitative easing, and that they would, with the maturities of the treasuries and mortgage-backed securities, normally they'll just let that run off, but they're reinvesting and buying into more, so that $700 billion is actually going to be higher than that when you think about the amount of investment that they're putting into it. So that's definitely help on the bond market here. But stocks are up a little bit. I think Dow was up about 100. Yesterday it lost basically 3,000. It was like 3 points off from 3,000. Worst day since 1987. Now, obviously, a lot of this is on talk about what we're seeing due to the coronavirus. We're seeing government stepping in, warnings, and we're starting to see in areas with curfews and closures of schools to stores to a lot of different places. Transportation starting to have some restrictions. We're seeing a lot of different things happening, and of course, and there's warnings. President Trump gave a warning that this coronavirus could potentially extend into deep into the summer. So this is something that kind of spooked investors that this is more protracted. Obviously, this is going to lead just deeper into recession. So I think right at this point, recession is basically, I mean, it's when, not if, type of thing. Again, kind of like this coronavirus was. So it's a matter of when, but not if, that we'll start seeing a recession develop from all this. So let's see how this is playing on the bond market. Bond market end of the day very nicely. As we saw, we had the last week we had a huge drop off. Yesterday we kind of made up a lot of that ground. Right now we're up about 6 basis points. We started the morning off a little bit lower, but we're up a little bit, trying to work its way up. We were in kind of negative territory. However, right now it's trying to make its headway upwards. We got a lot of room in either direction, so it could swiftly move in either direction. Next floor of support, of course, would be the 25-day moving average here. Our next ceiling here is at 102.844, and we're just sitting here right around around 102.40ish range. All right, so stocks are about the same, should be unchanged unless depending on the pricing from yesterday. But if you're looking at technicals here from where we closed yesterday and today, we're only up about 6 basis points, so it should not be any price changes as of yet. There's no price improvements yet. With any luck, we'll see some improvements later on, but at this moment, market's still kind of moving a little slow, and there's no mortgage rates are still about the same. Yields are up a little bit. We're up about 0.77 right now. As you can see here, it's touched off the 0.8. But right now it's sitting right about 0.77, so it's up a little bit from yesterday's close as well. All right, so that's pretty much the wrap. Again, rates have been doing pretty good on the technical side. The biggest thing is a lot of lenders got slammed so hard with the influx of new applications. They were up approximately 500% from year over year. Normally, a good year is what I've been hearing. A good year over the course of a year was about about $2 trillion worth of business. Basically what happened is we had about $5 trillion of business going in at 1 month. That's how much production came in, and how this basically shut down the banking system. So they artificially, to slow things down, they had to raise rates on there. I'm starting to see with a few of our investors, it's shaking out a little bit. We're getting a little bit better pricing, but it's not quite perfect yet. So hopefully, fingers crossed, it'll still continue to work its way through and get things moving along again and help as many people as possible. All right. So if you guys are in California and want any assistance, please either direct message me or email me. Are the two best ways. Email is probably the quickest turnaround, as I get that more quickly. Otherwise, you guys have a great rest of your day. Thanks so much for watching, and we'll look forward to see you guys in tomorrow's video. Bye bye.